Welcome to Unfiltered Finance, and we have Roger Scott with us today. We're talking about a narrative that we have heard over and over again, but we really want to dig deep into that, and that is AI versus software. And over the last year specifically, we've seen a huge divergence in AI stock versus software stock. And so, Roger, I want to ask you just kind of first and foremost, is this something as an investor that you see and you're like, oh man, I've got to run for the hills if I'm invested in things like, Adobe or Salesforce?
No, no. As a matter of fact, not at all. I think if anybody does that, they're making a huge mistake. And one of the reasons for that is, I think every one of these companies is going to be completely dependent on AI one way or another. Let me actually give you a really good example. Okay, this is actually a really good example of what we're talking about. So about 20 years ago or 15 years ago, Adobe came out with a position that so actually it was about 20 years ago. They came out with a position that, our software is the best. We're going to keep it. We're going to be selling it in stores, and we're not going to allow anyone to download it, and we're going to make it really complicated and all that. And you know what they ended up doing 5, 10 years later? It's all web services now. It's all online. Everything is online. And this is exactly the same thing. This is exactly the same thing that was happening with the internet. What people don't realize is that AI is not going to be something unique and separate. It's going to become part of everything that we do. So, to give you another good example, think about this. If I asked you 50 years ago, how many technology companies out there, you could probably count them on, big companies, you could probably count them on one hand or two hands. There weren't that many technology companies. There was Intel, there was Microsoft, but there weren't that many tech companies. Now, technology has, over the last 50 years, technology has become part of everything. So, for example, GE is a technology company right now, right? GE is a technology company right now. It's an aerospace technology company. I bet you 99.9% everything GE does revolves around technology. And I always tell people this, and I tell people that ultimately in the next 30 years, every company is going to be a technology company. My wife has that cleaning thing, that Roomba, whatever it's called, that cleans things. Is that a cleaning device, or is that a technology device? You see what I'm saying? What about when you're able to make your vacuum cleaner do its own vacuuming, and you can talk to it and you can have a robot? Is that a cleaning supply, or is that it starts becoming very intermixed. And as technology becomes more and more advanced, those lines will become more and more blurred. So, and it's funny that you mentioned Adobe, because I have a relative that does advanced graphics. She lives in Hollywood, and she does advanced graphics for movie studios. And she's been doing it for 20 years. She makes those posters that we see when we drive around, and see. So it's a pretty interesting job. So I asked her, I said, let me ask you something. I'm a little concerned because, I go to Google, and I put a picture of my cat in, and I type in, cat becomes a day trader. And next thing you know, I have a beautiful picture of my cat being a day trader. Like, what do they need? What, and I don't know how to draw it to save my life. And she says, you know what? The industry has been preparing for that for the last 10 years now. And actually, they're taking Adobe. Funny that you mentioned Adobe. They're taking Adobe, and they're making Adobe have an AI agent inside where you'll be able to communicate with Adobe, and Adobe will be able to make those custom pictures for you automatically using AI. So is it AI, or is it? Do you see what I mean? It becomes very blurred, and I think that's just going to continue. Tesla, it's AI. Is it a self-driving car? Is it software? Is it a car? Is it AI? It gets very, very blurry.
So what we're seeing right now, you're saying, is that this market fluctuation is it basically everything's repricing as they integrate, and just, but how do you decide, okay, who wins and who loses at the end of it?
It, to me, this is more, to me, the way I see it, it's more of a rebalancing. It's not really, it's not, it's more of banks and financial companies finally getting through their thick skulls that AI is not going anywhere and that these companies are going to require more space for their data centers, which is real estate, right? But it's not, it's technology, right? Back in the day when we used to think data centers, we used to think storage facilities, where people put their clothes. Well, now when I talk about storage facilities, they're all being bought up by Amazon and Nvidia, and now they're storing these big computers that are driving the AI bus. So again, but what we're seeing right now, getting back to your question, what we're seeing right now is we're seeing banks and institutions, financial institutions, having to readjust how they value these companies, because what these companies are doing is the companies like Nvidia and Micron and all these chip companies, they see the writing on the wall. They know exactly what's happening. They can't keep up with it. It's happening so fast. So what they're telling the banks is, hey, we're moving at a speed of light. We're not moving 10 times faster. We're moving 100 times faster. And the banks are saying, oh, well, how are we going to do this? And how are we going to do that? And this, well, that's just how life works. That's exactly the same thing that happened over the internet with Netscape and Amazon and all these companies 40 years ago or 30 years ago. So this is just a readjustment. And these readjustments happen very, very fast. And I'll tell you why. Because anyone that needs convincing will always hear they're making money. They're making money. It's very hard to convince a bank to do something when you're just dangling a carrot in front of them. That's not the case with AI anymore. It's becoming useful now. There's actually turnaround. There's money coming out of these companies. AI is actually CRM. CRM. What's the name for the company CRM? God, we use them. We use them for our. One second, I'll tell you right now. Salesforce. So Salesforce right now, 30 to 40% of all decisions that Salesforce is making is made using AI right now. The software that I use to analyze my stocks on a daily basis, they're incorporating AI into it as we speak. So all of it's becoming part of our society. It's not a pie in the sky. It's not like telling somebody 20 years ago we're going to have self-driving cars. That's a hard sell. This is a very easy sell because they see the benefit of it and they're seeing the use of it. I mean, Nvidia stock went down because the CEO said our AI is growing so fast that we just don't know what to do with ourselves. And the banks come and downgrade the stock because they don't know how to plan their spending. I mean, that's ridiculous. That's ridiculous. So
Well, let me ask you this, because if I don't know all of the backstory, right, and I'm just looking at the numbers. So I was looking at the Morningstar Global AI and Big Data Consensus Index, which gained 26.6% over the past year. Morningstar Software Index comparatively, though, gained just 2.6%. And then and that's just the indices. So if you look at the companies, right, it's like you mentioned Salesforce down 27%, HubSpot 45, Adobe 35 down. Is that if I'm just looking at the numbers, what do investors need to know? Because that can appear really scary.
yes, that's a great question. This is what investors need to know, and this is something that most folks don't talk about. Markets have a very, very strong correlation. Typical large cap stocks have a 2/3 correlation to the overall market. Right now, the market is in a state of uncertainty. Okay, obvious reasons: war, this whole AI reconfiguration of value. There's a lot of unknowns in this market. We still don't know. I mean, we're halfway through 2026 almost, and we still don't know if we're going to have tariffs or not, and what their percentage is going to be. I mean, it's kind of
How
like
long the Strait of Hormuz will be closed?
right. We just don't. We just exactly. We don't know. There's a lot of unknown, and a lot of that is putting pressure on the market. And as a result, a lot of these companies are taking it under the chin. Companies that have absolutely nothing to do with this, and companies that have no impact. To give you a really good example, I want to give you a really good example. Last quarter, this whole thing started a while back. This whole thing started 2 quarters ago with AI valuations. Okay, and there was genuine concern the quarter before last. last quarter, and I was very, very adamant to pay attention. Texas Instrument, NVIDIA, Applied Materials, AMD, what did I miss? AVGO, and basically I just named the top 10 semiconductor companies in the world. They all beat estimates and revenue and all said that they're doing amazingly well and they're growing faster than they said before. Every one of them. Remember something. Ultimately, Wall Street, ultimately, when it's all said and done, we have all this volatility, but ultimately Wall Street looks at earnings and earnings. You could all there's a lot of noise, there's a lot of ups and downs, but ultimately when it's said and done, the market is going to react on earnings. That's just based simple fundamental analysis that's been around for 100 years. Okay. Are we expensive compared to the fundamentals or are we not? And what will happen is as soon as the market gets back above the 50-day moving average, right now it's not above the 50-day moving average, but when it does, institutions are going to start buying up again. So just yesterday, we had the slightest positive news about the war, and the market already started drifting higher. This market wants to go higher. So I believe the reason we're seeing these valuations right now has nothing to do with the individual companies and has a lot more to do with the environment that we're in right now. And
So then,
once this environment passes, I believe things will come back to normality.
so then, if I'm looking at trades to make, is this something where I'm like, oh, well, let me, these companies are low right now. Let me buy into software, even though there's a lot of fear mongering happening. Or is this something where you just hold where you're at and you run to, AI since it's doing well?
Um, I can't really say that AI is doing really, really well compared to a lot of these chip stocks. I would say they're almost in the same camp. I can't really say correlation wise they're doing that much better. They're maybe doing a little bit better, but they're not doing a whole lot better. So my answer is this, and I can't give you a simple answer. I'd love to give you a simple answer, but unfortunately, it's not that simple. If you are an investor, if you are planning on holding for a long time meaning 2, 3, 4 years versus 2 months, I think this is a fantastic time. I think this is the best time. I'm buying these companies for my 401k, for my retirement account. Um,
Software companies or AI companies?
both. Basically, stocks that are deeply down that show really good value. But Adobe's definitely one of those companies that I'm buying. All right. Basically, companies that have been beaten down, but companies that are still really good, solid companies that are not going anywhere. Um, Seagate, Western Digital, Adobe, all these companies are they're not doing as well as they could be. But again, 2, 3, 4 years from now, that climate is going to change. One of the big banks just came out yesterday with an expectation of the S&P being at 7,500 by the end of the year. We're right now at 6,600, 6,640. So if we move up there, I promise you Adobe will start reacting. Microsoft folks and Adobe, they're not going anywhere. They're not going anywhere. Not for the next, I don't know, maybe 15, 20 years. People are still going to be using Photoshop and people are still going to be using their Microsoft Office for everything they do. And Microsoft is still going to be one of the top companies in the world. So if you are an investor, I think this is a beautiful time to get into these companies. I think this is a perfect time. The only thing is, you got to be careful. Don't buy 2 or 3 of companies that do similar things. Don't buy 3 semiconductor stocks or three software stocks. These companies are very correlated to each other. So you're just leveraging yourself if you're doing that. Just pick 1 or 2 and stay with them. But if you're a trader, this is not a good time. This is an awful time because markets are in a flux of uncertainty right now. We have a lot of unknown, and we just don't know how things are going to shake out or how long it's going to take. Now, I'm going to make an assumption that once this war is behind us, things are going to get a lot better, a lot faster. But I don't want to put a timeline on it. We just don't know. And as you know, we're hearing very conflicting things from Washington. We just don't know if it's going to be over next week or next year. And as we know, look at what happened with the Ukraine war. I mean, we'll be out of there. I mean, if you told me that it was going to be this long, I would have said, you're insane. Here we are. Here we are. So one thing we've learned is not to make projections, especially when it comes to things of war. And the problem is, Emily, wars and acts of God are superseding intervening acts. In other words, the market could be on a very nice, smooth path, going like this, and then someone says something or does something, and it's, war or fundamental or company related, and the stock can just go down. So technicals and momentum and all of the things that I measure, they work really well when there's no specific news. But when there's news, the news is what's controlling because the market's always trying to price in whatever's priced with that whatever that news is telling us.
So it's a great situation if you're an investor and this is something that you want to take an opportunity for the long term. But if you are a trader in this market, what do you do? What's the play here?
You have to be very, very, very selective. This is the hardest market I've been in probably 20, 25 years. The reason it's the hardest market is not because market stocks are going down. They're not. They're actually just very choppy, which is the worst scenario because there's no movement. And when there's no movement, how do you make money from movement when there's no movement? We make money from momentum. When you have no momentum, it's like okay, I'll give you a great analogy. It's like going to the beach when the weather's beautiful, taking your surfboard, spending $10,000 on surf lessons, and forgetting to check how high the waves are going to be that day. And there's no waves that day. What are you going to do? You have a beautiful $500,000 sailboat, but there's no wind. What are you going to do? That's where we're at right now. Fortunately, these scenarios do not last very long. They last usually a month, a couple of weeks. Now, right now, it's even worse because we have high volatility and no direction. So you have a shake and bake. You have market doing this, but they're not going anywhere. So options are expensive, but there's no movement. So and then they stop being, as soon as the market stops, the options shrink and then they expand and then they shrink. There's no continuity to anything. So
It's like
how do you,
driving down a bumpy road and your teeth are chattering, but all you got to do is just get through it.
exactly, exactly.
Would you
Now,
say that AI and software is more of that than just the overall market, or is this across the board?
it's across the board, except, well, no, it's not across the board. If you're an energy trader, or if you trade basic materials or energies, commodities, those type of stocks, there's money to be made. But for the majority of stocks, and again, it's not just AI or chips, it's the market. It's the market. I want folks to understand this is not AI didn't all of a sudden get sick. Software didn't get sick. This is across the board. If you don't believe me, folks, take a look at financial stocks. Okay, you'll see what I'm talking about. They're all doing the same thing. So no, this is across the board. This is something we just have to get through. Now,
So
with
then
that said, there are
go ahead.
plenty of opportunities for day trading and real short-term trading, like 1, 2 day holds, day trading, option writing, non-directional strategies. A lot of the things that we do in a lot of my programs are thriving in this kind of small caps that have no correlation to this. They're in the world of their own. But large cap stocks right now, if you're a swing trader, meaning a classic swing trader, meaning holding stocks for 2 weeks, 3 weeks, oh man, it's rough out there.
So we talked about, okay, the short term, and we've talked about the long term. As far as opportunity, if you're somebody that this makes you a little bit uncomfortable and maybe you don't want to double down, is this a just whatever you do, don't sell and hold on? Or, you know what I'm saying? Like I guess my question is more, even if you're scared, you have to hold on, or is there an exit strategy here for people who maybe don't have the thick enough skin?
Again, it depends on your horizon. It depends what you like. Well, let me give you two scenarios. You have a lot of folks who go from they're swing traders when the positions work their way, and then they become investors when the position goes against them. Okay, so if that's you, and if you've already let the stock go, and it's a star stock like Microsoft or Adobe, you don't need to do anything. You need to understand that this is temporary. If you have a stock that has a P ratio of 400 and has never made any money, and we never discussed it on any of my shows, you probably need to evaluate it. So again, this is not a time to throw the baby out with the bathwater. This is a time, if you've been holding a stock and you still hold on to the stock and it's a good quality, A quality stock and it's in the S&P 500 like Adobe, Microsoft, Seagate, whatnot, you don't need to liquidate stocks right now. You just need to withstand this downturn. Um,
So if someone is looking to invest in some of these companies and capitalize on this opportunity, what are some of the things they should look for? Like, are the institutional giants maybe too big to integrate AI in a way that's meaningful? Or are they, because they are institutional giants, a safer bet?
um, Here's the thing with AI, and this is something that's been going on for 2 years right now. As soon as an AI company pops up, it's being eaten up immediately by one of the top 5 or 6 names. I don't think there are any small or individual AI companies. So nowadays, when I think about AI, I think about mega cap stocks. I think about Netflix. I think about Oracle. I think about Meta. I think about Netflix. I mean Tesla. I think about those type of stocks. Those stocks are the ones that are going to are eating up AI, and those are the AI barometers actually. So the mega caps, the Apple, the Apples, the Nvidias, the Googles, the Metas, the mega caps. Those are the ones you want to be looking at. And those stocks, by the way, were the first ones to start going down. And usually the first stocks to start going down are the first ones to start going up. I
That's an
could
interesting
assure,
perspective.
yeah. Usually the first ones to start moving are the ones you want to watch because as soon as they recover, everything kind of follows them. So I think that one, folks shouldn't try to separate AI from software. I think that's a huge mistake. I think that's a huge mistake because these companies are going out of their way to commingle that as much as they can. Okay. And if you think you're going to find something that has to do with AI that doesn't have to do with software, that's not how the markets are looking at them. They're looking at it as tech. It's a NASDAQ tech stock. That's it, period. And those stocks are all trading below the 50-day moving average right now. Actually, half of them are trading below the 100-day moving average. This morning, this morning out of 100 stocks, 54 out of 100, NASDAQ 100 has 100 stocks, 54 were trading below the 200-day moving average. So it's not your favorite stock. It's the NASDAQ 100 as a whole. And you need to understand that. And you need to understand it's not because of something that's happening with AI versus that story is not relevant to this. That may impact other things, but not what's going on with the stock market right now. And I just don't want to send people down the wrong road, you know?
No, I do. And it's interesting because there has been so much talk about it. There's been so much rhetoric. AI is eating software and, is this the end of days and that kind of thing. And what the other storyline that we've heard, especially in 2026 with the announcement of how many jobs are being lost, is this anything but AI swing in the opposite direction where folks are maybe a little more bearish when it comes to AI. I mean, do you feel like that's just a temporary sentiment that then passes and goes out the window?
Yes, I think they're trying to. I think it's a big. I think it's what usually happens on Wall Street. Wall Street needs to find a story for something, and they can't just say this is happening because it's happening. They have to have cause. And you notice they always say profit taking. They never say loss taking. They always say profit taking. Like loss taking doesn't happen. Like 50% of people don't take a loss when the other 50 take a profit. That's just Wall Street trying to explain things and justify what's happening. Because if they come and say, well, it's selling off and we really don't know why it's selling off, it's not going to be a really good answer, right? So they have to create a reason, an explanation. Here's the reality of things, okay? And this is really the reality. Um, the whole impact and I've talked about this many, many times. AI right now is impacting companies, and as far as employment, it's impacting companies directly, quickly. Companies that are very, very hyper focused on technology. Meta, I could totally see AI doing a job on Meta. They just laid off 800,000 people or something like that, some crazy number. Amazon, where you have logistics, when you have a lot of computer work. But let's talk about 99.9% of the world that of people that barely have a computer working at their office and don't even have 4G yet at home. Okay. We got a good 10 years before it really starts impacting us. Okay. Before what I mean is before your regular Joe starts losing their job, you got a good 5 to 10 years before that happens. I think people are getting way ahead of themselves. Like I think they're getting so ahead of themselves that it's silly. Okay, they think tomorrow that a robot is going to do their gardening or walk their dog. Take it easy. We're a good 5 to 10 years away from that. It will happen, but we're not there yet. I just want to remind people that 60% of people in this country don't even have 4G yet on their phones, okay? So these things take a lot longer than most people think. Things take a lot of time. Look at how long it took us to get the internet at a reasonable. It took us 20 years to get the internet fast enough to watch movies on it, okay? I mean, people need to relax a little bit. Yesterday, oh, AI, now AI is doing everything. No. Big companies, huge companies, and I say big companies, I'm talking about your Teslas, your Amazons, those companies, if they don't do it now, they will start losing money. But your traditional company that's been doing networks and they're not going to spend five billion dollars on a robot right now. That's just silly. So that's just a pie in the sky for most of us, and it will be for the next 5 to 10 years. So I think that for the most part, employment is not going to be impacted nearly as much as people think by AI. It will become a very natural course. And also, here's the thing: a lot of those same people who will lose their jobs because of AI will get a new job in an AI field that will still require some kind of a manual process, checks and balances, safety, things that you just won't trust an AI to do. So I think that's way, way, way. I think people are just silly when it comes to that. Okay, I think people are creating. They think we're going to be in the Jetsons world tomorrow. I mean, let's take it easy.
Yeah, yeah. So when it comes to this, the headline, right? Like AI is eating software. In your words, in your opinion, what would you say the narrative actually is?
No, I think that AI and software are becoming more advanced, and because AI is software, folks. It's just more advanced level of software. It's a software 30 years ago was a chip was enough to put this paper on. Now, you could put as much information as I have on this paper on a chip. I remember Atari 1979
Yeah, like floppy disks.
right, right, 8 tracks. Well, we're past that now. But technology, as it gets more advanced, it will start incorporating more AI within it. Software is not going anywhere. It's in AI is integrating within the software. So the software is going to become more advanced, hence more attractive because it has AI. Microsoft is not going to create an AI and put all of their stuff that's been making them billions of trillions of dollars out of business. It's going to enhance it. Notice, for example, you'll start what you're going to start seeing in the next couple of years, Emily, is you're going to start seeing like your favorite software, and you're going to open up your favorite software, and there's going to be, hi, my name is whatever, Gene, and I'm your AI assistant, and hey, you don't have to type anything. Just talk to me and I'll do whatever you need. That's going to start happening over in terms of the scope of that software. And who wouldn't want, now think about this. What percentage of people right now don't want to buy Adobe software because it's too complicated? I mean, to learn to use it is pretty hard. Imagine having an AI, hey, I want this picture greener. No, I want it brighter. No, I want it yellower. No, and you just talk, and the AI showing you how it's doing it. That's like in 3 years. Now, that's going to sell more Adobe products. Okay,
Yeah.
that's good.
Well,
So it's going to become it's becoming more and more integrated. It's not pushing software out of the way. It's bringing software more in. It's bringing AI into the software area.
so then just as a quick last take, what would you say the risks are for investors if there are any, and what are the key warnings you would have for them not to do?
Okay, that's a good question. Now, watch out for companies where AI is replacing the business model. Okay, that's going away. Let me give you a good example of that. Remember what happened to travel agents when the internet came and started being around? Remember we used to have travel agents all over the place? Do you see travel agents anywhere now? No. There's going to be a certain business group of businesses, a certain segment of industries where you're just not going to need that industry because you have AI. Um, for example, they have software that does reminders. Basically, things that right now, things that are going to become obsolete that we're not going to need anymore. Now, there's going to be some of that. Not as much as people think, but there's going to be some of that. Those, excuse me, those type of programs are going to start. They're never going to wake up from this. And it's not just software; it could be other industries. Like, for example, online education. There's a company out there that helps kids learn. Okay, now I'm pretty sure within the next 5 years, the AI will be able to help kids learn basic math and things like that. So if you have a tutoring business, you're probably not going to do great in that business. Alternatively, advanced tutoring, like tutoring for the bar or medical boards, I don't think anybody will trust AI just yet. So again, it depends on the business model, and you can use common sense. And honestly, your best bet here is using common sense. Is AI putting a goodbye to this industry? Industry, not is it making the software better? Because ultimately, you're going to be using the software within the AI. Nobody's going to be changing HTML. Nobody's going to be redesigning the internet in the next 5 years. The structure that AI is going to come on is already built into the software. So nobody's going to be redoing all of that anytime soon. There's no reason for it because they play well together. So I think that some industries will be impacted. For the most part, they will not be impacted. So I think the concierge industry, the hospitality industry, customer service, directions, things like that things that have been disappearing slowly because of technology are going to continue disappearing. But I think for the most part, I'm not expecting waiters to lose their jobs. I don't think we're going to get walking robots taking our orders anytime soon, except if you're in an airport. So I think things will get. What I don't want people doing is mixing up what I'm saying right now and buying a second tier stock because it's down. Because here's what happens. Whenever you have a market turn, it's like a wave. You know how wave washes out everything that's dirty into on the sand? It's like a cleaning mechanism, right? Market corrections do the same thing. What happens is this. Let's say you have two stocks. They're both at $100. You have a market correction. They both go down to $70. The market goes up. The good stock comes up. The bad stock keeps going down. So you've got to not use this as an excuse to load up on second tier stocks. If you're going to go buy as an investor a stock that you think will rebound, you better be buying first tier stocks. You better be buying S&P 500 stocks that have been proven and work. Don't go buying speculative stocks. Those are the ones that crack during corrections. That's when they have their washout periods. See, when everything is running up, everybody's a genius in a bull market. All stocks, crappy stuff. It's very hard to pick good stocks in a bull market. It's easy to find good stocks in a crappy market. So find stocks that are holding on the best right now. Find stocks that are making money. Find stocks that are reporting positive revisions to their earnings. Things like that.
And ones that have maybe been through the ringer before.
Several times. Like, for example, IBM, Microsoft, GE. Where's GE going to go? Where is Caterpillar going to go? Where is Boeing going to go? You see my point?
Yeah.
That's the kind of companies I'm talking about. These companies aren't going anywhere. They're going nowhere. They've got contracts for the next 30 years already. Seriously, they do. They do. They're not going anywhere. So yeah, if you want to buy them and if you don't have an exit window, in other words, you can hold them for a long time, knock yourself out. But again, be realistic. Don't confuse a trade with an investment, and don't. Oh, this is a trade. Oh, it's going against me. Don't. You know who you are. A lot of folks do that. Don't do that. Very, very dangerous game to play. But if you're serious and if you have a couple extra $1,000 and you want to invest in some stocks, please, this is a great time to buy Dow stocks. Just put your money in the Dow Jones. It will come back. It always
Perfect.
does. Yeah.
Well, Roger, I appreciate it. Thank you because it's been an interesting perspective. And I feel like it's a little bit like everybody just calm down.
Yes. Yes. Please. Please. I'm going to tell you this right now. There's an asset called the VIX. To pull it up, you need to find $VIX. Okay.
This is so funny. I just did an interview with Nate on this morning.
I've been telling everyone this. When the VIX goes below 20, the fear is over. Market has assimilated the war within its value. So you don't have to. And funny thing, this morning it was inching down to 21 already, like going down. I mean, we were almost there. So this market really wants to price this war in. It really does. The VIX measures the add the money options on the S&P 500. So it's like direct measuring. It's like you can't get any more direct than that. And if it goes below 20, nobody's concerned about the war very much. I honestly think people are more concerned about interest rates than the war right now.
Yeah.
So
Well, Roger, thank you so much for your time. I appreciate it.